Hello everyone, the stock market once again has experienced a wild swing with massive sell-offs at the start of last week and then rallied before the market closed on Friday. In this video, I will share my views on whether the market has bottomed and if this rally will last. I will also include some basic technical analysis for some of the mega cap stocks. But before that, if you like such videos, hope you can help me hit on the like and subscribe buttons. Your small action means a lot to me and the YouTube algorithm. Earlier in the week, the stock market continued its losing streak and massive sell-off, with Tesla going below $700, Apple hitting $140, and SPY and QQQ breaking $400 and $300 respectively. At one point, on 12 May Thursday, the Fear and Greed Index has dropped to as low as 6. And just when the market is filled with lots of fear and uncertainties, various stocks close higher after a comeback rally on Friday. So can the rally sustain? Personally, I think the rally can go into next week or weeks. But as to how long it will sustain, I can't be sure as I am not a fortune teller. However, I would think we are not ready to go to all-time high yet. Looking at Friday's volume vis-a-vis the price gains, it appears that it could be shorts covering their positions rather than institutions pumping money and liquidity back into the market. As the rally is only one day at the moment, we have to observe how the market moves from here and whether this upward momentum continues. So in the next technical analysis segment of this video, I will share on what price points to look out for in terms of bullish confirmation. And if the market is still bearish, what entry prices or opportunities we may have in the coming weeks or even months. Do also stay to the end of the video as I share my view on the overall market outlook at this point. Okay, let's start things off with SPY, which tracks the S&P 500, aka the broader market. With the recent sell-off, it is not surprised to see that SPY is in a downward channel. At this point, I believe the market is severely oversold and shorts are covering, so the current bounce should likely continue, as the RSI and MACD oscillators seem to be showing that as well. It is very possible for the stock to rise and test the upper side of the downward channel, which is around $410. I also wouldn't be surprised if it continues to break out of that channel to test 415 to 420 range, where the 50 and 61.8 Fibonacci levels are. For a slightly bullish case, SPY needs to close above 420 for a couple of days, and for a stronger bullish confirmation, we need to hit and close above 431 where the current 50 moving average is. Do take note that $400 is a strong resistance and support, so if it breaks below $400 again, it will invalidate the current rally and indicate that we are nowhere near a bullish market yet. Anyway, just to share with everyone, I spotted an unusual put option on Friday. There is this huge purchase on put option that adds up to millions of dollars. All these transactions happen within the span of 1 minute. The strike prices are $380 and $372, with expiry date on 17 June this year. For those who are not familiar with options, this is a bearish move, where the buyer believes that SPY will head towards 380 or 372 by mid-June. Somebody knows something that we don't know? I'm not sure. Also, a quick disclaimer, this does not mean that the stock needs to hit that price points for the buyer to earn money. The options can be closed at earlier date with any sign of profits when the market dips. Personally, with so many uncertainties in the market, I am not quite sure what catalyst can bring S&P 500 out of the woods at the moment. I am of the view that this bounce or rally is to cool off the indicators and oscillators before it goes further down. We will likely see the stock falling below $400 again, going back into the downward channel, and probably retest the recent low of 385. But this is not a financial advice, alright? Next, let's have a quick look at VIX, which is currently sitting at close to $29. Long story short, as long as it is below 30, it means the rally will continue. So keep a lookout for this if you want to know if the rally can sustain or not. The next support for VIX is around $25 or $26 range. So if it hits towards this price point, it means the broader market will continue its rally. In my view, I am expecting VIX to bounce off the support and hit $35 and above in the coming weeks or even months. And if the market crashes due to macro factors or whichever reasons, I think we can expect VIX to hit 40s range. For your info, during the COVID crash, VIX went up to 85. Now let's move on to Apple. Apple has been holding on quite well previously until last week where it dropped almost 10% at one point in time. For Apple to drop this amount shows that the market sentiment is weak at the moment, but luckily it recovered a fair bit on Friday. As mentioned in my previous videos, key support areas were at 159, which is the 200 moving average, and then you have 156 and 150, following which the next support is at 140. Clearly, Apple has sliced through all these support levels like tofu over the last 2 weeks. Therefore, for Apple to turn things around, they need to push above these support levels again, as simple as that. Anything below 160, I will remain cautious about the market. Reason being, if the market makers want the broader market to go down, they have to take down Apple and Microsoft. In my view, these are the last two soldiers to fall in a market crash. And the bad news is, both stocks are showing weakness at the moment. Thinking way ahead, if the market wants to go further down, we could potentially see a bearish head and shoulder pattern in the coming months, which can stretch all the way into Q3 or Q4 this year. But that's a little too far-fetched at the moment, so let's see how things pan out in the second half of the year. Okay, personally, I have stepped in at 140 as the price is too good to resist. At the moment, it seems not too bad as the price bounced up from 138. Meantime, I will likely stay on the sidelines as it rallies up and wait for another opportunity to enter. For viewers who understand options, to also share, at the start of the month, I have sold 2 Apple put options at 130 strike price, which are expiring in June. So if Apple falls to that price, I will be happy to take at least one assignment and maybe roll another one down to 120, depending on how bearish the market is at that point. But if Apple continues to stay around 140s or 150s range, I am okay as well as I have already collected my premiums. Next, Tesla. The stock is down close to 40% from its all-time high. And mind you, this is a company that is on a 50% growth quarter on quarter. So I'm not quite sure if the current drop makes any sense. Clearly, it is moving along with the broader market. I don't know about you, but I am definitely seizing this opportunity to load up more shares for the long term. Anyway, similar to other stocks, Tesla is in a downward trend. However, it appears that there is a potential double bottom pattern here, with decent volume coming in on Thursday. This is a bullish pattern if it is confirmed. As Tesla bounces up from here, the first test will be the resistance level at $800 and followed by around 850 range where the top of the downward channel is. For it to be bullish, it needs to go above 250 moving averages, which are 913 and 935 respectively. For a breakout to happen, it needs to punch through 972. In my view, I think the stock will get rejected at one of the resistance levels and then head back to $700 or even $600 range. But this is purely based on existing macro factors. As you know, things can change along the way, so let's see how's the situation weeks and months down the road. Quick analysis on Alphabet aka Google. It has been floating around 2200 and 2400 range. Currently, MACD shows that the stock wants to go up. The next big resistance level is standing at $2,500. So let's see if it breaks above or gets rejected at this level when the market rallies. On the other hand, if there is a landslide and Google falls to $2,000 where the next strong support is, I may step in to buy. The only thing that could stop me is that I have enough allocation for Google's shares already. Anyway, anything below 2K is very good buying opportunity in my opinion. Similar to Apple, Microsoft only showed sign of weakness quite recently. In my previous videos, I have shared that sub 270s is a strong support, and that was only broken a few trading days ago. As mentioned, together with Apple, this will be the last soldier to fall if the market wants to go down. Anyway, if the market rally continues from this point, we should expect Microsoft to reclaim 270 at least, after which it needs to close above the 50 moving average at 288 and to also fill the gap at 293 to 296. There is also another gap at 307 to 309. We need all this to happen to be bullish. On the downside, as shared previously, the next meaningful consolidation zone is sub 200 to 220. Let's visit what other price points we can enter between 220 to 270 at a later date when and if the market wants to go down. So here are some of my thoughts. I feel we could be in a rally from a severely oversold and bearish condition, where shorts are covering their positions, and usually such bear market rally can be huge. I believe from a bigger picture, we are still in a downtrend as many companies are on their way to test the previous resistance levels or moving averages as shared earlier. I mean, yes, there is a rally, but a change in trend? Not yet. Not till we get bullish confirmation. So don't be too eager to chase this bounce, alright? The reason why I'm thinking this way is because I don't see any catalyst to push the market to all-time high at the moment. A quick recap, or rather a reminder on what's going on right now. Inflation, war, global supply chain issues, COVID lockdown in powerhouse China, interest rate hikes, potential recession, as well as decelerating growth and weaker forward guidance from several giant companies. With this in place, do you think the market is ready to punch through all resistance levels and go to the moon or all-time high? I doubt so. In my view, I think the Fed and market makers want to take liquidity and money out from the stock market and investors, so that investors will have lesser money to spend. When consumers tighten their pocket, inflation will likely drop as there will be lesser demand for goods. To add on, I am of the view that the market will likely pivot when inflation is under control and Fed stops their interest rate hikes. Anyway, this is only my personal view, which could be very wrong. Alright, that's all for this video. Do you think the market has bottomed? Let me know in the comments section below. Lastly, if you found this video useful, hope you can like and subscribe to my channel. A thumbs up would be encouraging too. Thank you.